Thank you all for joining us for the Home Buying and Home Ownership Workshop. Joining us today is Myra Rivera, Broker Associate Realtor for the Rivera Group at Century 21 Americana. She is going to help us learn how to navigate home buying and home ownership skillfully and smoothly. So I'm going to go ahead and hand it over to Myra to get us started.
Hello, everyone. It's a pleasure to be here to introduce you to navigating the home buying market. I know it's one of the biggest financial decisions that a lot of people make. And a lot of people, we've been doing this for a few years here in the city locally. And one of the biggest things or feedback that we get at the end when we close any transaction, whether someone is buying or selling, is that it was a lot of information and they weren't quite sure where to start, or they wish they would have known something if they had done a previous transaction in the past. So every time that we get someone buying or selling in multiple times, there's always something new that they're learning because it's quite a bit. So I wanted to congratulate everyone for taking that first step in educating yourself before taking the first step into the market of owning real estate. So one of the things that people say that is the main thing that they wish they knew was what are the steps and what are the pitfalls if I'm thinking of purchasing a home, right? So we have concerns about pricing, how do I begin, where do I search, market conditions, a lot of different information. So my goal here is to make sure that you leave knowing the steps of purchasing and also having some of the most common questions answered or some of your concerns so that you enter the market whenever you're ready, or whether you already own a home and it's your second, third time purchasing, that you already have some information that can be useful to you and your families. If at any point you have any questions, or if you have anything in particular that you want us to cover, if you could please put it on the chat so I can make sure that we do cover it. And of course, if throughout the conversation something didn't make sense or you want me to elaborate, please let me know. Okay, so perfect. So when you enter the real estate market, we want to make sure that you enter with confidence. Buying a home or buying multiple homes shouldn't be a stressful process where you're not quite sure where to begin. So we want to make sure that you have the right questions answered before. So when you are in the market, you're focusing on the important thing, which is finding that perfect property that you're in the market for. So here, I wanted to welcome everyone to what the process is once you begin. So the feedback that we get is that some buyers feel that it's an exciting process, some feel it's a little more stressful, and most people say it's a brand new experience that, it's a little different to what they're used to. So the simple fact is that buying a home is rarely a purchase that you make every day. We even have clients that have purchased homes in the past, and a lot of times it's multiple. And when they come back, they're like, wait, I remember we did this before, and it rings a bell, but it's something that you don't do every day. So you still need a refresher. So on a regular basis, so this is crucial to why you need an expert to guide you throughout the process. So myself and my team, I have a team of licensed realtors that also, we work together to make sure that we make the dream of homeownership available to all of our clients. And all of our realtors are trained to guide you from step one to the very end. So when it comes to buying a home, it should be completely about you. And as cliche as it sounds, it's exactly that. So when you're buying a home, you should base that decision based off of your goals, what your requirements are, what your financial situation is like, the time that you have, your lifestyle choices, and your concerns. So for example, lifestyle choices can be, if you have children, you want to live in a particular school zoning. Maybe it can be, hey, I want to live in this certain type of property. I want an HOA. I don't want an HOA. Or if your dream is to buy a first-time home, a starter home, or maybe it can be that you're trying to buy an upgrade your home to something bigger for your family, or you're trying to buy an investment property. So it's always important that that first decision of, hey, I want to purchase a home comes from what is it that you want to take out of this property. It's also very, very crucial when we are talking about buying a house that you acknowledge and you are aware that real estate is an amazing asset to have. And we're going to cover in the next slides why it's such a good thing to own real estate and the different benefits that you have or the different things that you can do with owning properties. So I always like to, I'll mention it now and I'll remind you later that when you're buying a house, you have to see it as in the future, as an investment for the future or an asset that you're going to use for the future. So we'll cover some items on that as well. Okay, so on this slide, there's a lot of moving parts when it comes to buying a home. Here in the presentation, I'm going to show you two different timelines. So when you're buying a house, you're either buying it financed or you're buying it cash. Most of the buyers will finance a home. So these steps I use here are going to be the process of what happens the second you begin deciding that you want to buy a house, every single step of the way. And on one of the points, you're going to see that it says that you go under contract. Once you go under contract, then you start another separate time frame, which is your mortgage process. So we'll cover that as well, because I know most buyers people after they buy their first home, one of the most common questions I get is, I wish I knew what loan products were available for me. I wish I knew I didn't need 20% down, that I could buy with less, and items like that. So just in a nutshell, I broke down the buying process into 10 steps. So the first steps would be defining your goals. That's where you define what it is that you want to buy, what type of property, and what's the reason that you're buying. So the slide that we just discussed. The second step is researching your options. So this workshop is going to help you already know what options you have. So once you make that decision, all you have to do is kind of go more in depth into those options that seem more suitable for you. Making plans. So before you begin the home buying process, it's always important that you create a plan. So time frame, when do you have to be moved in by? How much money do you have to save? There's a lot of things that before we even have you go look at homes, that we have you plan so that you know everything ahead of time, and the whole process or the rest of the process is just making sure that all the items are falling into place. The fourth item is selecting a realtor. So one of my agents, he likes to always say that going and buying a house or selling a home without a real estate agent is like going into court without an attorney. You don't have representation. So when you select a realtor, the realtor is going to represent you throughout the whole transaction. Typically, most people will reach out to the realtor first, and we help you with every step of the way. There are so many people involved in a real estate transaction. You have your mortgage lenders, your title company, you have inspectors, appraisers, you have different contractors for other fields. When you go into the loan, there's processors, funders. There's a bunch of different people involved. So the realtor kind of ties all of those people together and is the main source of communication for you. So if any of those people have any concerns, information regarding your purchase, they're sending it back to your realtor, so your realtor can help you assess it and explain it to you so that you can make that decision. Your realtor at no point makes the decisions for you. We're just here to guide you and explain the information and gather it for you. So the fifth step would be getting pre-approved. So this is where you get approved for a mortgage. So if you're going to be buying, this is where you go into what kind of mortgages are available to you and all the details regarding your loan. And most importantly, how much do I qualify for? The next step would be looking for a property. So once you are qualified, you get a pre-approval letter. Your lender will tell you, okay, you've been pre-approved. Here are the terms of your approval. You've been pre-approved for this amount. This is what your payment's going to look like, your loan product, and how much you're bringing into the table when you are about to close the loan. So once you have all of that information, now you have a letter that you can start searching for homes with. At that point, once we have that letter, then for our team, what we do is we sit you down. We go over your criteria, the areas of town that you'd like to look into. Based on the approval amount that you have, we can show you what options there are. We can also, once we get to another slide, we'll discuss the option of maybe new construction. Like some people ask us, is my price range suitable for new construction because I'd like to buy new? Or no, I'd like to go resale. Or what's the difference in pricing between one and another? So the realtor can help you compare that as you're looking for properties. Once you find one, that's when we go into our 7th step, which is negotiating an offer. I believe that this is the most important step because the realtor has to have knowledge and expertise on not just the market, but the contracts and the consequences of the terms within the contract, because that's the contract that you're signing to purchase this house. So we want to make sure that you understand what that contract says, what it's binding you to, and that you are also getting a good deal on this purchase that you're purchasing. So negotiating the offer, your realtor should be helping you structure the offer, which will break down how or parts of the offer later as well, that they should be helping you structure this offer to where you do get the house that you want. Most importantly, and this is why this is so important, especially in this market, I'm sure most of you know it's a seller's market. Most houses have multiple offers right now. So you sending an offer is going to differentiate whether the seller picks yours or not. And if this is your new home and your family's invested and this is the one we want, this is the one, we don't want to look anymore. You want to make sure that you're sending a very good offer or that your offer stands out. The next step is going to be removing contingencies. So once a contract has been executed, you have a certain, you have contingencies, which are timeframes that conditions need to be met. We'll go over what those are, but the goal of the escrow, once your contract is accepted to closing, is to clear those contingencies and make sure that you are still protecting your deposit and obviously that you are getting your house at the end of that process. The next one is preparing for closing. Preparing for closing, most of you will know as, oh, this is the time that our final documents are at title and we get to go sign, and we're also about to get our keys. So preparing for closing prepares all of those final documents, and it's when we get all the details together for you to go and get the property recorded under your name for transferring of ownership. Then there's a move-in. So we like to put in the move-in because for us as realtors, the process doesn't end the second your house records and you get the keys. There's other things that are done after the fact that we like to let you know, give you tips on, so that process is not stressful. Because if the real estate process wasn't, some people get stressed in the after. Well, what do I do now? This is the first home I've ever owned. How do I turn on this utility? How do I do this? Or items like that. So I wanted to cover some in there as well. Go to the next slide. So on this one, this is step number 1, which is defining your goals. So as I mentioned, your search should begin internally with you defining what it is that you want to get out of this purchase before you even start meeting with the lender, the realtor, or going out to see any properties. So you have to determine, is this going to be a permanent place for you and your family? Is it a starter home? Is this an investment, or is this a second home? These things can vary drastically. If someone tells me I want to buy a residence that I want to occupy, it could be a difference from, okay, well, now we know your down payment is going to be anywhere from 3 to 5%. But if someone says, I'd rather buy a house and I want to rent it, that's 20% because now it's an investment. So it's important to be clear on which route you want to take so that your finances, your approval, everything is geared towards that and there's no surprises for you at the end. Whatever the reason is, it's important to buy with the eye on the resale investment potential. So as I mentioned before, you're all graduating, so you will be purchasing, you'll be purchasing a home eventually, and at one point you might say, okay, well, now I've outgrown this home. I've got married, I've had kids, I want a different area. You have different opportunities once you decide that you want to purchase something else. So it's important that you are situated in a good financial spot where you have the opportunity of either selling that property, maybe converting into a rental investment. And there's multiple opportunities just depending on what it is that you want to do. But keeping an eye when you purchase it so that you have those opportunities later down the road when you're ready to move on to something else, that's always very important to know. So why has buying a home also become such an investment opportunity? Let me give you a few reasons. So no one can predict the future. The real estate market goes up, it goes down. It really depends, because people always ask, and I'm sure a lot of you, this is probably the main question: when is it a good time to buy? When is it a good time to sell? What I like to tell people is the market goes up and it goes down. So whether you're in the market to invest and you're waiting for the highs and the lows, most of the people that are buying to occupy. They're occupying because their lifestyle has changed and their lifestyle demands a new residence. So someone that, let's say, for example, just got a relocation you just graduated, you got a relocation to a different state, and the job is already there. Then you're faced with, do I rent or do I buy? It's not something that you can tell the job, hey, can you wait till the market is low so I can buy? They give you a certain date. So you have to, most people do that. If it's something that is their lifestyle is demanding this purchase, that's when they do it. And even then, there's a lot of benefits to purchasing. Another main reason is the land has become a decreasing resource. So as you know, most of us are here in Las Vegas, there's not that much land anymore. A lot of the vacant spots that you've seen, especially recently, a lot of those are new developments. So a lot of those vacant lands are becoming homes. So the less homes that there are on the market, then obviously the higher the demand. Housing is typically considered a stable investment, offering good returns on investment. So this is important if you decide to make your property a rental and make it an investment in the future. So if that was the case, we can give you some information on return on investments and what you would do exactly with an investment opportunity. I know we did some videos in the past with investments and how to manage those. That's a very important topic if that's the route someone wants to take. Low interest rates over the last 10 years have made mortgages affordable. So this is a very common misconception as well, where people think that, hey, if I'm buying low, my payment will be lower. But the payment is highly dependent on both of those items, the price and the interest rate. So a higher rate can mean a higher payment. So that's probably one of the main reasons why there's actually a lot of people buying right now in a seller's market. There's a lot of buyers, and that's the reason why, because the interest rates right now are extremely low. People are getting 2s, maybe 3s, with like historically in the last few years, that was unheard of. Money that pays a mortgage turns into equity. So this is extremely important because if you decide to sell a home in the future, then you're getting your investment, your money back in your equity. Whatever you decide to do with this money is completely up to you. But a lot of people use this as an opportunity. So they use this money to move it into different opportunities. So we have clients that have sold a home and used that money to maybe pay off debt and then put it into a bigger home. So they started with the starter home and they grew out of that property, gained a lot of equity, moved that into a bigger property, and kept their payment almost the same. So the payment didn't change, but the home did. It got bigger. We also see clients sell and use that money to start businesses. So if you need to self-fund yourself for a business or for another opportunity, you can always take equity out of your house. Let's see. Demographics and immigration have always been major factors in influencing investment opportunities. So there's different investment opportunities just depending on the cities. I think one of the major things that this is more for residential, but like in commercial, for example, there's such thing as opportunity zones, which they help you with tax breaks. So for people that invested in commercial, that's always a good thing to consider as well. It is not always necessary to sell your house. So for example, as I mentioned before with the equity, you have equity in the property that you could choose to sell and then use that money for whatever your plans are. However, you also have the opportunity of keeping the home and turning it into an investment. So some people might have the goal of owning a rental portfolio. So if you want to start growing your rental portfolio and having those properties start giving you a monthly income, that's something to also consider. This next slide. Oh, okay, all right. So this slide, this one's important, so I had to go back to it. So this is the zip code appreciation map. And if you, I know it's very small to see, but my email should be in the last slide again, and they can also put it on the chat. But if you need it, we can send you this. So this kind of gives you an idea of how much zip codes have appreciated from last year to this year. So it'll give you an idea. So if you're looking for a certain area and appreciation is important to you, this map definitely gives you more information regarding those. Okay, so we have the second step. So the second step in your search should be researching your options. Researching your options, the first step is going to be the buying and financing a home. So we already mentioned that you can either buy cash or you can buy finance. And if you're thinking of financing, well, what kind of loans are available to you and which one is best suited for you? The most common loans are FHA, conventional, VA. So they all have different requirements and different down payment amounts. What we like to always consider too is, let's say for example, FHA and conventional, and you're thinking of occupying the home. The main difference is conventional is either going to be 3% or 5% for an owner occupant versus FHA is going to be a 3.5. Also, at the time that you're qualifying for these loans, the interest rate on one and the other can be different. So for example, if your FHA is offering you a lower interest rate and it's a 3.5, and on the conventional, you have either the 3 or the 5, you can compare. You can compare to see, well, how much money do I have to come in with and what is my payment going to be? And then determine, well, what is more important? Is it the down payment of what I'm giving or is it the payment? And sometimes they may be the same. Another important thing that people ask is, well, what if I want to buy a house and I do have money or I have my equity from another home that I'm moving into this one? Is it beneficial to give the 20% down? The main benefit of that is if you are occupying and you are giving 20% or more, then your loan will not have mortgage insurance included. Let's see. So when you're researching your option, it's very important to review your financial situation to understand how much you can actually afford. So that's one of the most common mistakes that people make, that they start looking at homes, or we're all guilty of this. I know I did it too before I got a license. We start on Zillow, we start on Redfin, we start online. And you start thinking, okay, well, this is the criteria that I want, and this is the home that I want. But can you qualify for that price? Now you've set an expectation of this is the house I want, but you're not sure if that price fits your financial situation at the time. So it's always important to research how much I qualify for before giving yourself an expectation of what you want to purchase. So 3 main components that determine the start of all the searches are going to be your location, your type, and your price. So where do you want to live? What type of home do you want to buy? Do you want to buy a house, a townhome, a condo? Do you want a fourplex, a duplex? And also price. How much can you afford? And how much are you comfortable with? Let's say, for example, you qualify for $700,000. However, you don't want your payment to be that high. So you prefer to stay at $400,000, $500,000, or whatever the case may be. So that's why it's important to know what is my max and what is my comfortable payment, so that when you're searching, you are already aware. Only you can determine the importance of each of these items, but it is very important to find this out at the beginning so that you have realistic expectations when you begin your search. So location, 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 and I'm sure you've heard it. Whenever people relate to real estate, they always say location is the most important thing. Right? So I hear someone giggling over here, so that's true. I know I used to hear that all the time, and we always say it and we repeat it 3 times, so it must be important. So the reason why is because obviously moving a house, it's either not possible or at least not it's going to be very expensive to move something. Once you purchase a house, it's already set in a certain place. So as we show that appreciation map, if you're in a low appreciating zip code, that's something that you're going to have to deal with when you're trying to gain equity on the property. Another thing, when you buy a home in a good location, it's usually a solid long-term investment. So what that means is that if it's a strong housing market, houses in better areas, they tend to, I'm reading my notes backwards. Homes in desirable areas, they like to see average prices increase. So if it's a better area, the appreciation goes up. And when the housing market is the way that it is right now, like the seller's market, those properties in higher areas or higher desired areas, they tend to go faster, they tend to go for more. Or if the market is that strong on the seller side, buyers are willing to pay more for those properties. And I'll touch on what that means. But some of those houses in better areas are selling for more than market value because of the demand that area has. On the contrary, in a weak market, those houses tend to retain their value a lot better. So I know I touched on what type of home do you want to live in? And for people that are first-time buyers, this is the different type of property. So you need to understand what the differences are. So we have houses or single-family residences. There's also duplexes and fourplexes. There's condos and townhomes. And the main difference, so the main difference is houses, well, everyone knows what a house is. So the house is going to be detached. It's going to have its own lot, its own parcel number. You're going to have more space. You also equally have more maintenance, but these are also going to be more expensive. So it's going to be at the top of the price if we're looking at all the different property types. Another benefit of buying maybe something, let's say for example, you qualify for something that you're like, oh yeah, I'm at the very bottom of of the price range for houses. So I'm not quite liking what I qualify for. They're too small, they're not in the areas I like. Then you might consider a property type that is a little cheaper. Like for example, a townhome or a condo. Townhomes and condos tend to be a lot cheaper than houses. The difference between those two is condos, you'll see mostly like an apartment style where you have different units, you have neighbors on top, you have adjoining walls with your neighbors. And a townhome will typically, or most of the time, we have like 2 stories where you own both top and bottom, and you still have adjoining the neighbors, but sometimes it's only 1 or 2. It's not as many as in a condo. And townhomes also tend to have garages sometimes or small little patios. So it's like a mini house, they're just attached. There's also another one that's not mentioned on here is manufactured. So manufactured homes, as long as the land has been converted, it's also considered real estate. If it's one of the communities where you have to rent the land separately, then that's not something that we consider real estate. The other one is duplex and fourplex. This one's a very interesting one because some people have the impression if I want to buy a fourplex, it's obviously for an investment. You're not going to live in all 4 units. But it is possible to purchase a fourplex as a primary resident. And that means instead of buying a fourplex with 20% down as you would for an investment, you're actually buying it with your normal 3.5, or 5%. And the reason why this is done is because if you structure your loan and tell the bank, I'm going to live in one of these units, and you are going to make that your primary, then they'll allow you to use a normal primary loan on this investment. And one of the big pluses that a lot of people don't know and that I think is amazing is you can use the income from all other 3 units as your income. So you're qualified with your income of this is how much I make, this is how much I qualified for. But if you're buying an investment with a fourplex, the other 3 rents are verified and they're used as rental income towards your approval. So sometimes you can qualify a little bit more because of those rents. All right, so the next slide is understanding the marketing value of properties, or the market value of properties. So this one goes back to what I mentioned earlier on, we have what market value is. So it's what is the home worth in the current market. However, homes ultimately sell for what the buyer is willing to pay. So for example, let's just say 300,000. If we have a house at 300,000, which right now there's very, very few, then you're gonna have multiple buyers. If the buyers are offering above, then they're raising the price. They're driving the price up. Same thing with the higher desired area. Let's say the house is 500,000 or 600,000. You have multiple buyers, or you have one that's really, really in love with the house and says, I will offer you this amount and I'll pay the difference between market value and the price I'm offering. That's how property prices can be driven up. So whether you choose your location or the property based on your budget, it's important to research the values in the current market in the current area. So for us as real estate agents, we research not only what our houses are listed for, but more importantly, we look at what are they selling for. So if someone wants to purchase a home or someone wants to sell their home, we don't base the price of our estimate on this is what they're asking for, this is what the seller wants. No, we're basing it off of what has sold in the area. So the current selling price of a home does not mean that the property is worth that amount to you. Market conditions and what a buyer is willing to pay for the property is what really determines the true value at the moment. So some of the criteria that can be considered is location, obviously, like we mentioned already, condition of the home. So for example, if the price range is somewhere between 4,000 and 5,000, is the house turnkey renovated, then we might go towards the higher range versus does the house need a lot of work. The buyer demand. Another thing is current prices on similar properties. So if we have sold around the area, those prices will determine the value of this one. Recent sales for comparative properties, so that's the same. It's going to be the properties that have sold in the area, and availability of financing. That one is major on condos, for example. Condos are not always financeable. So if a certain property is not financeable, like condos, or a property that is torn down, let's say, for example, it's missing plumbing, it's missing flooring, the bank will not finance a property that needs that much work. And that will drive the price down because it has to be sold cash. So ultimately, the value of any property is dependent on what's important to you and how much the buyer is willing to pay for the property. So making your plans. So this one is just basically answering all of these questions. I know we kind of covered them already. So answering the following questions, and it puts you in a great position to research what's going to meet your needs as far as housing and also mortgage options. So this slide gives you some priorities on things to consider when you're starting to purchase a home. So what kind of home do you want? What does your family want from the home? Do you want a turnkey home, or are you okay with buying one that needs work? Remember, the price difference will be the factor that changes there. Choosing the top 5 must-haves versus the would-haves. So you have to know, well, I absolutely need 3 bedrooms or more versus I would like to have a house with 5 bedrooms to have extra space. So it's important to determine the difference when you're looking for a home. Are you pre-approved for a mortgage? And what can you afford comfortably in a monthly basis? Also, what is the ideal time to move? Step number 4 is selecting a realtor. So realtors, there's a lot of different realtors in the city. We have thousands. Realtors can specialize in different areas. We have residential, we have commercial, we have property managers. Us personally, we specialize in residential purchases and sales. So it's important to find out, does the realtor that you're picking specialize in the area that you want? You also need to find someone that is committed to not just finding you a home, but finding you the right home. You want to make sure the realtor is not just sending you a house trying to get you into one, but that property meets your needs and that it's meeting all the criteria that you have, that you feel comfortable with that house. Our responsibilities are basically to educate you on the agency and professional responsibilities that you have as a home buyer. To provide all the disclosures, the legal disclosures The sellers are required to give you disclosures on the condition of the home. If they've had any major repairs done, they're supposed to disclose that. We make sure that you get those disclosures during the process of purchasing that home. Also, loyalty, confidentiality. So we over confidentiality. So we have a license, we hold a license, and the division holds us accountable to confidentiality. We cannot share confidential information with the sellers or with anyone else other than yourself. And compliance. We want to make sure that the whole transaction is being done ethically and compliant to the laws and the terms of the contract. Understanding your responsibilities. Obviously, the realtor guides you, but we don't make the decision for you. So we give you the information so you can make that decision. And we research the market. We are full-time, so every single day that's what we're doing. We're watching the market, we're watching the market conditions. We're making sure that if we're sending offers, what kind of offers are being accepted, especially in this market. Not every offer is accepted. Most houses have multiple offers. We've had success in getting our offers accepted because we understand the terms and what terms the sellers are accepting in the current market. So that's extremely important. Another thing is the realtor, we have access to the multiple listing service, which at the last slide, I will put my phone number. So if you're in the market or you're curious in what's available, that link will give you access to the multiple listing service on my behalf. And that'll give you the most accurate search of what's available. Also, we get the properties real time. As soon as another realtor in the whole state lists a property for sale, we get it. And we're able to set you up on that search where the second it comes out, we both get it so that you're not missing out on any properties. And obviously the realtor network. So we also have trainings or we have coaches. We're part of, like personally, we're a part of national organizations for real estate training or national organizations for advocating for real estate bills or local changes. And if that network has any sellers that are thinking of selling in the city or those agents have anything coming up, with those network, we're able to know about properties before they actually hit the market. Viewing and assessing homes. So this one is extremely important. And then our team does an amazing job at making sure that this one is something that you're aware of at the time of sending an offer. When you send an offer, all you see, well, on the internet, you're going to see all the information. You're going to see a price. When you're working with the realtor will do a price analysis of, is this a fair price for us to offer? So is there an opportunity of making our offer better, or is this property overpriced so that we can prepare for a low appraisal? This is important so that you kind of know, okay, well, this is what my offer is, but this is what I should expect. Consultation and negotiation, we make sure we negotiate the contract for you and we consult with you so you're aware of your terms and also that you're within your contingencies the whole time. In closing, we make sure that obviously all the steps have been met and every step of the way has been completed by all the parties associated with the transaction so that when you close, you get your keys and you get to enjoy it and not think, oh, wait, was there anything missed? So this one here says that your realtor should represent you with comprehensive and high quality service. The seller does have their realtor already that represents them. When a person puts their home on the market, they work with the realtor to put it up, with the exception of for sale by owners, which we also have access to helping purchase those properties too, by the way. But if they have their own realtor, some buyers are not aware that they can have their own representation as well. So you can choose your own realtor to represent you. And this includes new construction too. So the agents at the new construction developments represent the seller, which is the builder. And you as a client, you are able to walk in and represent yourself, and they'll make you aware that you're acknowledging you're representing yourself, or you're able to bring a realtor with you that can help you through that process as well. Get pre-approved. So getting pre-approved is the first step because you want to know how much you qualify for. You want to know what your payment's going to be and how much to prepare for. And examining all of these your financial situation will get you prepared to what you need to provide to the bank once your final approval is being worked on so that you can actually close on this loan. Because keep in mind, this is a pre-approval. It means that they have looked at your finances daily, and just based on those, you qualify for X amount, but they still have to verify everything within your finances to give you a final approval. And you need to identify a property in order to get a final approval for that loan. And on the mortgage process, I wanted to introduce my partner, who is also a mortgage lender, and he is going to kind of give you a quick overview of what that process is like. So keep in mind, the timeline I showed you before is for purchasing. This one begins the second your offer is accepted to the closing date when your property reports.
How are we on time?
About 15 minutes.
2 minutes. Do you guys have any questions? We're short on time. You're trying to buy a house soon?
And I know we're running a little short on time, so if we have any questions, please let us know so we can address and make sure that you get the answers to what you came for.
Write them on the chat, please. Okay, so regarding the mortgage process, the first step would be getting financing for a property if you're thinking of doing a mortgage loan. For the most part, most first-time home buyers do need financing. For the first property, you could go either conventional or FHA. The difference between FHA, it's a federal insured loan. You're going to get a 3.5 down payment. If you do conventional as a first-time home buyer, you get the option to be going on the market at 3%. If you don't qualify, since certain lenders do have certain overlays and requirements, then on a conventional, you're going to go in at a 5% on the purchase price. Once you meet with the lender's job is to make sure that for you guys as students, you guys don't have the work history. So they do require that you have work history, but as students, they take your transcripts as an exchange of your work history. So you go ahead, as long as you have your transcripts that you can provide, that you've been coming to school full time, and a job offer showing that you are going to be working full time in the field of study, they're able to qualify you for a loan. So it's going to be depending on you if you want to go ahead and take that first step regarding purchasing a property, or if you want to just hold off, collect a little bit more money. I know a lot of students come out with maybe student loan debts. They don't count all the debts. So it's important to kind of also touch that with your lender so they're able to see what your debt to income ratios are. The first step, the lender is going to go ahead and check your finances. For you guys, they'll check your transcripts. They'll check your job offer. They'll see how much you're making. And then they're going to go ahead and look at your debts. So if you picked up any credit cards throughout the time, if you picked up any cars under your name, your student loan debts, and they'll go ahead and check what your debt to income ratios, and they'll determine what you qualify for. The good thing about you guys being students is that you probably didn't get much credit card debt, hopefully, didn't go and buy cars. Your job history, well, it's your school history. And we don't have to go and verify the employment on that, on your history. We just have to verify the employment moving forward, which makes it a very clean file. When it comes to your lender, at that point, they're going to give you a pre-approval. Once they give you the pre-approval, they determine the price that you qualified for, and they hand it over to the real estate agents. The real estate agent's job is to help you find a property during that time. The lender, for the most part, would have collected as much information regarding you as a borrower to get you financing. Once you go into the step of looking for a property and you finally have identified a home, you guys want? Yeah, once you guys have identified a property, then you start the escrow process. Let's go back to the first one. You identify a property, and then you're officially under contract, and the loan application gets submitted to processing. The lender would have done most of his homework, hoping that he didn't miss anything. The loan gets submitted, we get an approval. Once the approval gets submitted, the processing processes your approval, and they check for conditions. Sometimes they might need clarification on certain things as far as what your job. They're going to need to verify that you are fully, that you are working. They're going to make sure that you gave them a certain, that you did give them certain information, that information is true. Once they verify that, then we get a conditional approval back. The lender or investors decide they want to move forward with the loan, and they verify your credit. Once your credit is verified, Then we move on to the next step, which is ordering settlement services for third-party vendors. What would be, we have to appraise the property. The bank's not gonna lend you more money than what a home is worth. So that's also something that you have to consider and realize that, you know, what the lenders is trying to keep you from paying too much money for the property, because they are gonna appraise the property and they're not gonna lend you more than what the home is worth. If the property's in a flood zone, we need to get flood reports. We verify that there's no liens on the property, there's no mortgage liens, no trash liens, and title kind of takes care of all that. We also need to get the home insurance on the property, and that's all done during that process. Once we order all the settlements, then it goes into the next step, which is where underwriting kind of takes over. So throughout that whole process, underwriting is looking at your file. That's where we get the conditional approval. Underwriting then reviews it again to make sure that everything's compliant. They try to pull your credit again to make sure that your credit didn't change, because your credit score needs to be at a 620 plus to qualify for a loan. And they make sure that it doesn't change, that you didn't add any new debts, that you didn't add any credit cards, any cars during the process. So as long as nothing changes from your initial pre-approval, everything should be fine going forward to your final approval. Once the underwriter reviews all of that, your final approval is issued. You can finally lock your rate at a 620. If your score is 740 plus, you're going to get a better rate compared to somebody coming in the market at a 620. But even at a 620, we're seeing people coming in with on FHA's at a 2.8, on conventionals 3.1, 3.2. If you're at on a 640 plus credit score, then you're getting 2.3s on FHAs, you're getting 2.9s on conventional. And they do kind of vary regarding the interest rate. Once the file is approved, you lock your rate, we get you a nice rate. We redisclose the file because we have to disclose the figures to you as far as what your payment's gonna be, what your closing costs are. At the final approval, we more than likely have final numbers as far as what the title fees are, what the closing costs are. If you got any contributions from the sellers, those will all be deducted from what you're coming out of pocket with. There are different programs that you guys can look into as far as down payment assistance that'll cover your down payment. Right now, rates are so good that you could even get a low rate and still get a credit towards your closing cost, but you still have to come in with a down payment. Once we get the final approval, it gets sent over to the closing department in the lending institution. So they make sure that the file is ready to go again. So it gets reviewed again. They make sure that nobody missed anything, underwriting didn't miss anything, the loan offers didn't miss anything, and they review the loan, they balance the figures with the title company. When they balance the figures, it just means that they're making sure that you're not paying over or that there's no credits that were missed when it comes time to funding. Once you go to the closing table, the closing department is going to send the documents over to the title and escrow company, and that's where you're gonna go and sign your final documents. Once you sign your final documents, title's gonna give you wire instructions, and the wire instructions are gonna be either what your closing costs were or your down payment. Once that gets submitted and everything's signed, the documents get sent back to the lending company, and the lending company makes sure that there was no signatures missed, no documents missed, that your funds went into title. Once all that's reviewed again, then that's when the lending institution decides, okay, it's ready to close, let's send the money. Once the lender sends the money over to title and all funds are received, title lets everybody know, hey, we got the money. The borrower send the money, we send the money, it's ready to close. Once we get that, then they send out emails to everybody involved in the transaction, just to make sure that you guys don't have second thoughts regarding the purchase. And they make sure to say, you know what, we're all ready. So are you guys ready to buy? Are you guys ready to buy?
Not yet.
Not yet? But let's say you're already there at the closing table. You already got your money. You find your property, and we call you and tell you, what's your name?
I'm Jamie.
What is it?
Jamie.
Jamie?
Uh-huh.
Jamie, are you ready to close on this loan?
Yes, I'm ready.
Are you ready to be a homeowner?
I'm ready to be a homeowner.
So then we go back and we tell title we're ready to be homeowners, and we close the loan. And that's when everything gets recorded, and we go ahead and hand you your keys. So then the realtors show up, make a big celebration for you, and that's when homeownership happens. That's when it's official on the lending side. So on the lending side, we deal more of fighting with the underwriting to make sure that your file gets approved, that you get good rates, good financing, that all your options, that your financing options were disclosed, that you've made an educated decision as far as what you qualify for, what programs were available to you, and what it is that you want to do going forward. Do you want to come in with more money? Do you want to come in with as little money as possible? Do you want a better rate, but still pay your down payment? Do you want a higher rate, but cover it? So there's so many options that are specific to the person, depending on what it is that you want. Kind of going back to having clarity as far as what it is that you're looking for. Once that happens, then the lender's job is just to make sure that your loan is approved and that it doesn't fall through and everything goes smooth. The realtor's job is to fight with the other agent for you.
Negotiate with the other agent for you. So as you can see, we're running a little short on time, but that gives you an idea of all the moving parts that are happening. Every transaction is going to be specific to the borrower, the price range, what the goal is. This one just kind of goes back to the previous steps. You look for the property, you negotiate an offer, so your realtor negotiates those terms for you. On the slides, it has more information that we can email you if you'd like, but I wanted to kind of just skim through the last few things. So the most important thing I would say is this here. This protects your money. So make sure that when you are in the market for purchasing, just be aware of what your contingencies are, what these mean. So most people think once I am under contract, I don't have a way out. These things have to be met. The loan that he mentioned is right there, that third one, that you have to make sure that you're able to obtain financing. So all of these things can be explained to you once you're ready to purchase at a buyer consultation that's specific to yourself. And these things are also change in time frames too. Preparing for your closing and move-in. So I know we're a little bit short on time, so I wanted to see if there's any questions from anyone online or here in person that you'd want me to cover that we didn't already cover. And then here on the screen is my cell phone number. So if you're in the market or you will be in the market, have any questions, feel free to reach out to us. We have a whole team of agents and myself that can assist you. And also we can share a personal MLS access for you guys to use. So you can download an app and actually search on there what's like real time, what's available in the market right now. Do we have any questions from anyone?
Feel free to unmute yourselves if you have any questions on WebEx, or you can type it in the chat and we'll answer those for you. Or if anyone here has any questions.
Guys have any questions?
And I know some of these questions might be more specific to when you're actually in the market and the actual house you like or the market that you're looking into. So also feel free to reach out to us. We have the email, we have the phone number. So we have a few offices here in the city. We specialize in residential purchases and selling. And yes, you can also do both at the same time. The key is just the contingencies and the time frame. So we structure that plan to where you can sell one and have some time to move to the other. There's a multitude of options for you. But our goal was just to make sure that you knew some of the most important items and you have a certain understanding before you enter the market. If there's no other questions, then we want to go ahead and end on time because we want to be respectful of your time. So if there's any questions that you want to reach out to us personally, we would be more than happy to help you. And I hope this was helpful for you.
And before we end today's session, we just want to give a big thank you to you, Myra, for sharing your expertise, your time. Thank you so much, and thank you all for joining us both in person and online. For those of you that aren't online, I'm just going to type in a quick link here for your feedback. This helps us as we plan workshops every semester, so we appreciate if you would fill that out. We will have this recording up on YouTube in about a week or so, so if anyone wants to share this with anyone or just want to refer back to any of the information, you can do so. It'll be on the Graduate College YouTube channel. I hope everyone has a great rest of your day. Thank you all so much for joining us.
Thank you so much.